The belief that XRP has a chance to hit $750 in 2025 is being spread by XRP advocate Jake Claver. I therefore needed to learn more about what Jake might be seeing here that I might not be. Because I'm receiving inquiries, comments, and all sorts of people anticipating insane prices for XRP over the next 5 months, I'd like to give you a better explanation. Let's take a closer look at what Jake is observing in the market. What must go place in order for this to truly occur? And I'm going to get really upset if I think this is even a possibility. You should listen to what he has to say about the $750 today. Therefore, Jake frequently discusses the XRP domino theory impact. This is his most well-liked content and videos, and it is what actually draws people to him. Let's learn more about what he anticipates happening in this situation. The Bank of Japan oil market and the macroeconomic shock. The scenario is that the Bank of Japan raises interest rates due to a surge in oil prices, which causes the global yen carry trade to unwind and disrupts markets all over the world. Extreme volatility would result from the unwinding of leveraged bets financed by cheap yen, which would influence global bonds and stocks. And there is a moderate chance that this may occur. Shocks to the price of oil are possible, although analysts disagree over a complete unwind of the carry trade. I now have a thorough explanation of the nature and operation of the Japanese carry trade. If we get into this, I think the video will be about 30 minutes long, so I'm going to leave that in the description. Therefore, the information will be in the description if you require it. The digital yen scenario and the Japanese financial system. Japan, a significant investor of U.S. Treasury bonds, is driving the development of the digital yen. In order to maintain the digital yen, domestic money moves away from U.S. Treasuries, destabilizing bonds and constraining global liquidity. Capital reflux has the potential to significantly strain the U.S. and international credit markets, heightening concerns about a lack of liquidity. This has a low to moderate chance of occurring. The development of the digital yen is advancing. However, without further catalysts, a complete move away from treasuries is unlikely to occur. Jake frequently discusses the problems with Tether and Bitcoin, so if they are resolved, this may be a really important occasion. In this case, the demand for fully backed assets would be boosted by new U.S. worldwide stablecoin legislation, but market panic would result from Tether's investigations. The new regulations may result in a demand for U.S. Treasury securities of up to $2.3 trillion. The topic of discussion here is that the U.S. needs a new buyer for its debt. Stablecoin issuers are the top new buyers of U.S. debt. Over the next few years, they anticipate investing between $2 and $5 trillion in the stablecoin industry. The U.S. Treasury would have to support all of that. Funds would shift from riskier stablecoins to regulated alternatives as a result of a Tether crackdown and stricter stablecoin regulations, which might lead to a severe liquidity shortage. In markets for cryptocurrency, here the likelihood would be moderate. By 2026, stablecoin regulation is very possible, but it's unclear if this will lead to Tether's demise. In fact, the U.S. has now granted international stablecoin issuers some time to straighten out their operations. They can do this in as little as 18 months or as long as 3 years. Therefore, I don't think there's much possibility that Tether will fail in the coming months. Do I believe that Tether is having problems? Indeed. Do they need audits and reports of their individual support? Indeed. Is there anything further we can do about Tether? Of course. However, that is not our purpose. Let us continue this process. Crypto market contagion would also be the next phase. The situation would be a crypto market meltdown brought on by significant sell-offs, ETF volatility, and stablecoin panic. Bitcoin becomes a systematic risk for financial organizations as their exposure to ETFs grow. A quick sell-off of Bitcoin, Ethereum, and other cryptocurrencies would have a macroeconomic impact by sending shockwaves to established markets, particularly through intricately linked exchange-traded funds ETFs. Let me now pose a question to you. Do you believe that the XRP ledger will gain anything from Tether's collapse and other catastrophic events? It might undoubtedly help our LUSD in its growth and adoption, but it would likely be a black swan event for the rest of the cryptocurrency industry, which we haven't even seen yet. Additionally, we have witnessed events such as the FGX fraud and the collapse of Terra Luna. The cryptocurrency market suffered greatly as a result of those two factors. Do you believe that Tether implosion would be just as bad, if not worse? Personally, I believe it could be worse. The stock market sell-off and flight to liquidity would be the next step in this process. In the event that institutional losses lead to a significant sell-off in stocks, market stress would rise, and central banks would be less equipped or inclined to step in. More stock sell-offs would have an impact on the market and force institutions to look for other sources of liquidity, which might happen with a moderate probability. Although systemic shocks can affect stocks, extraordinary circumstances would be needed for a total catastrophe. XRP is release value or on-demand liquidity. Ripple's on-demand liquidity with XRP becomes appealing for quick cross-border payments and settlement layer for institutions and market infrastructures when traditional settlement rails take over. It does provide an example of the R3 cooperation, Project ION, which has been driving the DTCC's digital transformation for years. We have seen that the DTCC has patents that allow for the settlement or tokenization of monies using XRP, XM, or HBAR, and we'll have to wait and watch how this plays out. If you did and you reached the conclusion, kindly hit like and share. Many thanks. This video should not be interpreted as financial advice. The sole objective of this is amusement. I don't offer financial advice. If you need financial counsel, please get it. Now, let's return to the video.